So let's turn back to investment strategy. Our next guest saying there is no shortage of themes this year for investors, from the return of inflation, which we've been speaking of, concerns around the commodities supercycle, energy. Where do investors, or what do they look past at the moment? Andrew Mackin from Montaco Global Investments joining us now. Andrew, good morning to you. There is so much noise in the background at the moment, so makes it difficult for an investor, doesn't it? When we've got all of these things moving, and what should they be focusing on, and how you make actually wise investment decisions at this point? What's your view?
Yeah, well, we pose the question, are we all becoming thematic junkies? And, we could be forgiven because it seems that a new multi-decade theme is offered up almost on a daily basis. So really, we wrote a piece recently as a bit of a cautionary tale for investors who are trying to consider whether or not to buy, tomorrow's new theme that they discover. And really, we tried to come up with a really simple framework that investors might find helpful when they're trying to assess whether or not to add, tomorrow's new theme to their existing portfolio.
All right. So how do they do that?
Three simple things, really. Number one is, is the theme reliable or not? And as you rightly said up front, the latest themes this year around inflation, unclear if that's reliable or not. The commodities supercycle, iron ore price falling 50% in 6 months doesn't really fit with that. A great theme is really reliable. You can take it to the bank. Aging populations and driving demand for healthcare, that is absolutely certain. The shift in retail behaviours to digital channels, there's no question about that. So that's number one, how reliable is it? Number two, how likely will you actually make money in this theme? And there's a couple of parts to this. So say you go and buy a thematic ETF, and there are plenty out there today on the latest and greatest theme that you think is wonderful. Even if that is true, you've then got to ask yourself the question, are the underlying stocks held in that ETF related to the theme in question, number one? And then number two, are those businesses undervalued on a standalone basis? And that's not an easy question to answer. And then the third thing you've got to think about is, is the new theme that you find better than the existing themes that you already own in your portfolio? Because, we humans often think that more is always better. But if each incremental theme that you're adding to your portfolio is maybe not as good as the ones you already own today, then all you're doing is diluting returns. So what we often observe is actually that, some of the older, sort of more reliable themes are actually more valuable than some of the new whiz-bang themes that we discover. And they can often spawn new iterations that go underappreciated in the market for quite some time.
So on that basis then, Andrew, I mean, certainly you're saying perhaps look at those longer term themes. You've got to invest long as a result. But is it worthwhile perhaps splitting your portfolio into maximising those themes that are playing out in a short term level to those that are playing long term?
Well, you raise an interesting point around how you actually define a theme. I mean, we always think of themes as multi-year, multi-decade, like really long-term stuff. And the nature of those sorts of themes is that they move slowly but surely. Now, we live in a sort of a world of, instant gratification, and no one has a lot of patience these days. So watching a 10 or 20-year theme play out can be rather boring. But shorter term themes, I mean, we would call them cycles, not really themes. So, I mean, something like the shift in retail to e-commerce, I mean, that has already been around for decades, and a lot of your viewers would probably roll their eyes at such an idea, except that we're still only, less than 20% penetrated in the US and less than 25% penetrated in China. But that theme is absolutely reliable. You don't have to wonder, it's not like inflation, will it or won't it, or the commodities, will they or won't they? It is absolutely reliable. And even in that theme, it has spawned and continues to spawn a number of new sort of iterations that remain undervalued today.
All right, let's go back to your original examples then. For instance, the commodity supercycle, whether that's still current, essentially, and how you're responding to that.
Well, I mean, I was around for the last one, and one of the typical characteristics I would look for if I was trying to identify a commodity supercycle would be the strength of Chinese demand, given that they really do drive the demand growth for a lot of these major commodities. And the economic ingredient into Chinese demand is really Chinese credit. And Chinese credit growth has really fallen off a cliff lately, and especially the September Chinese residential property sales, as I'm sure you know. So, I mean, we just don't seem, in our view, we don't seem to have just the fundamental ingredients for a commodity super cycle. Now, we could be wrong on that, but our broader point is that, you know, when you own a theme, you shouldn't be waking up every morning wondering whether or not the theme even exists.
Whereas inflation is very much in our faces at the moment. Of course, perhaps that idea that it's transitory is now dissipating, that talk. But of course, it's a question of whether we're returning to that normal pace of inflation.
Yeah, and look, on the topic of inflation, I think it comes back to your time horizon as well, which touches on one of your previous points, because you know, if you're looking 1 year out, there is no question that inflation is going to be strong over that period. If you're looking 2 years out, it's less clear. If you're looking 5 years out, it's absolutely far from clear. I mean, the world's largest central banks spent 10 years after the GFC trying to create some sort of inflation, and they were running up against all sorts of structural headwinds relating to demographics, relating to the adoption of new technologies, which tend to hollow out certain workforces, relating to the very large sort of collective indebtedness of governments all around the world, which of course, you know, they can't really sustain higher interest rates because of those higher debt levels. And all of those things are still there. And in fact, many have gotten worse. So, you know, it is for anybody who thinks that inflation is an absolute certainty on sort of a 2, 3, 4 year view. I mean, it's not clear at all. Whereas in the short term, yes, of course, inflation is here, and we all know that today. So again, it comes back to your time horizon. It comes back to how do you define a theme versus a cycle, and obviously different people have different definitions on those words.
Andrew, interesting conversation. Interesting to contemplate those issues. Thanks for joining us from Montaka Global Investments.
Thank you.